Hey guys, one more thing. So right now I know what is an uptrend, what is a downtrend, what is consolidation. Right now I know about that, and I know this too, that what is my current state in my stock. So as in what is my current state? As in, let's say Amazon. Let's try Amazon and see what is my current state in Amazon. So this is Amazon, and if I want to see what is my current state, I'm going to check it with 3 months first. I'm not sure, but it's in consolidation. Let's confirm it with 6 months. It is in consolidation. Let's go back 1 year. That would give me clear vision. Yeah, it's in consolidation. What would I do? I'll draw lines. Let me draw lines. If I draw lines, that would be somewhere over here. Why? Because it's trying to play in between these numbers, right? It's going in this up down, and what is going on? It's gonna go right now. If I want to see, it would go back up a bit and then it's gonna come back down, or it's gonna break. If it's gonna break, what would I do? I'll definitely buy it. Or right now, if I want to buy, if I want to make money, I know it's gonna be a bit up until it comes back down. So this is how it's performing, right? The stock is going to behave how it behaved in the past a lot of times. There's never going to be new thing. It's never going to be like, oh my god, tomorrow it's going to be down. No, it's always going to follow its pattern. A lot of times this always happens, and people lose their money because they think it's going to take an unexpected turn. No, it's going to follow the previous pattern. It's always like that. So now, if there would be two strategies I can do. If I want to make short money, I can get in, stay in for like 5 or 10 days and see if it goes to 3,500 and come back down, or it could come back down tomorrow and then go back up and make money. Or I'll wait until it break this line. This line price would be 35.20. You can see over here, if I go to this line, the price is 35.29, and once it goes back up, we'll buy the stock, and I know it's going to give us huge money. Why? Because once it broke consolidation, it is going to be in huge uptrend. If it broke above, so that's what I mean. If it broke down, if I would be in stock, I'll get out with a loss. Or if it's a good stock, I'll wait because I know tomorrow it's going to go back up. So there is one strategy. This is one strategy. Okay. Let's see another example. Let's see Disney. I'm just thinking in my mind whatever comes back up, and whatever stocks comes up, I just see it. Okay. So now if I see Disney, it's in consolidation. It's in consolidation. And I can draw the lines. This is my consolidation. And what would I do? I'll wait. I'll wait until it goes back up, goes cross the consolidation, or goes back down. Okay. So now there is two things. Either this is going to happen. Either the stock is going to go to 135 and then come back down. Okay. Or tomorrow it could come back down. There is any possibility. Okay. So what can I do? I can take this trade tomorrow morning once my market opens up, or whatever. Whenever, let's say right now, if the market would be open, I would have taken a trade. And tomorrow I'll see what would happen if it goes up or down in 1 or 2 days. If tomorrow my stock comes over here, what would I do? I'll get out because I know it's going to go down and then come back up, right? So why will I wait? Or if I don't mind keeping it for long term, I can get in and wait because I know it's going to go till here at least until it comes back down. Why? Because this is called resistance and this is called support. What is it? I'm going to explain you in the next chapter, but this is how it's going to follow. Okay, so this is one strategy. I can get in, make some money until $135 because this is the price, 135.42, and get out with the decent profit. Or if tomorrow it goes down, I'll get out with a loss. Or if I know it's going to be good stock, I don't mind holding for some days until it goes back down and then goes up. I'll hold it for some days and it will be up later on with time. So 3 strategies I just told you. Let's see another example. Let's see another example with Facebook. Okay, let's see how it reacts, because every stock is different, guys, and every stock strategy is different. All you need to see is how it is and what's my current situation and what would I do. Okay, luckily Facebook is what happened in Facebook. Okay, Overall consolidation, let's say 3 months consolidation. This is my consolidation power. This is, oh sorry, this is my consolidation line. Let me draw the lines. This is my line and this is my line. Now what is it doing? It's trying to touch that parallel line. It's trying to touch this line. So it's going to go until here, until it crosses up or come back down. I can buy it tomorrow and make some money till 300, and what's the price over here? 305. So $10 a share I can make it. Within 2 or 3 days it's going to be up, or if it comes back down, I can either wait because it's going to be down and then come back up, or I can get out with a small loss tomorrow. So it's my strategy. Or another thing is I'll wait until it breaks this consolidation and be short and make huge money. So that's another strategy. Okay, let's see Twitter, how Twitter is. Twitter. Okay, so this is how Twitter looks like. Let's say 6 months. This is 3 months. Okay, I mean there is no clear vision. If I would not. Okay, this is good though. Okay, let me explain you one thing. From here to here it was an uptrend, right? Uptrend means it's gonna follow uptrend. Let's say today I'm over here. Okay, I need to explain you one more thing. We never play on the basis of earnings. In stock market there is something called earnings. So every stock posts their earnings on one day, on some day, in a quarter, one day in a quarter, and it's by default by the company. Let's say 10th of May or whatever. So let me turn on the flags. So why did I do that? So on this day Twitter posted their earnings. It was in good uptrend, but earnings that they posted was that it was not a good earnings for Twitter. What happened is the stock went down. So keep in mind, if there is earnings coming, you get out of the stock. We don't stay in touch with that stock, and if we are profitable, unless you are 100% sure the company is gonna be profitable this quarter. If you don't know about that, and if you're already profitable in that stock, get out. Or if you're in a bit loss, get out. Why? Because you don't know what's going to happen with the company on that earnings. Because what happened is this. So now what would happen is this. It's going back up, but it will take time to come over here. So if you would have get into that stock on this day, what would happen? You would be lost by now, and it's hard to recover that loss. So one stock on that day was $52. It is an uptrend, right? And according to me, an uptrend is going to follow uptrend. So if you would enter on this point and you don't keep in mind that there is earnings, you're going to be in huge loss, right? This happens. This is stock market. So keep in mind, if there is earnings, you never play. You keep in mind, you check it out that when is its earnings, and you don't play near the earnings. Okay. One other thing I told you guys, this is an uptrend. So the stock, as I told you, is going to be like a ladder, like this, like this, like this, like, oh my god, my bad, like this, and then up, and then down, and then up, and so on. Okay, and it's a huge up there. Okay, so now, as I told you, it's an uptrend. You can enter in, but the perfect position is to enter in over here. There is no way you can perfect that. I mean, there is something, but I cannot explain that to beginners. It's a huge concept. It's a big concept. So keep in mind, simple rule: if it's an uptrend, enter in any time. You can enter it over here, but if you are patient, you know it's gonna go down, but it's gonna come back up. Why? Because it's an uptrend. So keep in mind, this is one thing. Okay. One more example I want to show you. I wish I can find it because that's important. Okay, yeah, this is good. So I got the example. Okay, so consider this, guys. So this is, if I see from here, to here, it's an uptrend, right? But see what kind of uptrend it is. It went back up, up, down. Okay. Imagine I don't know what's going to happen tomorrow. I'm at this place. Okay. My bad. I'm going to explain you this thing. If I'm at this place right now, it's an uptrend, right? So technically I should get into the stock and buy the stocks, right? Okay. I bought the stock on this day. On this day. Tomorrow the stock went down. It's okay. It could go down and it could come back up, right? This is how a stock looks like, right? But see what happened, guys. The stock went down, went down, went down. Okay, no, wait, went down. Let me explain you. The stock went down and it came back up. It comes back up, 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 up. But instead of creating a new high, that is the rule of uptrend, it should create a new high. It went down. It is not creating a new high, it's creating a new low now. It's going down and you can feel it. You can feel it with the daily pattern. So I entered at 87.64. On this day I would be out 83.13. So for every share I'll be losing $4. But do you think it's better to get out? Why? Because I know that downtrend is going to follow downtrend, and see, that's what's happening. It's going to follow downtrend until it breaks. Now this break, you cannot figure it out. Why it break? Because it has an earnings, then it was down, and then it was way too down, and the persons realized that, you know what, it's a very low price for the stock, and the people start buying, and now there's a buying pressure. Okay, that's another thing. But you cannot predict this thing. You cannot. But this thing you can figure it out. So this is one thing I wanted to explain you. If there is an uptrend and you see the uptrend is starting to consolidate, you get out of the stock, because you don't know, it could be in downtrend too, and downtrend is going to follow downtrend. So once it starts to consolidate and you are already in that position, get out. Simple. Okay. Another thing, if there is an earnings nearby for that stock, you don't buy that stock. Simple. Earnings, we don't play earnings. We don't buy that stock. Get out of that stock. Simple. Okay. Perfect. So these two things, these two places we keep in mind and we make money. There is one consolidation break I wanted to show you, because that's one big place where you're gonna be like, when can I make money? I'm gonna explain you an example of that stock. Okay. I'm trying to find out. Give me 1 second, guys. I'm going to explain you one more example in, okay, Netflix. Let's see Netflix. Okay. 1 year. Okay. If I say right now, what is the condition of Netflix? It's in consolidation, and you can figure it out, right? There's no way we have any issues in that. Okay. What are these lines? Ignore it. I'm just going to cancel it for now. I'm going to explain it to you later on. Okay, 6 months consolidation right now. Consolidation. What's going to happen? It's going to go up and then come down or break. We'll wait for that. Breaks, we'll get in, or we can get in today, make some money. Simple. Okay, I want to explain you things from here. This is another consolidation, right? This is consolidation. And I know that consolidation break above. So this is a live example that I wanted to show you. Okay, it's going to clear all the lines, but okay. So let me draw the lines again. My bad. Okay, so this is one consolidation. This is one consolidation. See what happened. It broke the consolidation on this day. What happened when it breaks? Huge up. On this day, it's getting down, right? You get out. It's okay, but you made a huge profit from here to here, huge pop. That's a huge profit. So this is how you see it. It gets back down, and now it formed another consolidation. So now what would we do? We'll wait until it breaks it. Or we can make money in the small move. We can make money when, because it's going to go from 513 to 575 minimum. But how it goes, we don't know. It could be down tomorrow, and then go back up, right? Let's say it goes back up then. We don't know, but it's going to go back up for sure. We don't know how it's going to go back up. That's the thing. So if you're patient, you can buy today, and you know you'll be making approximately from 513 to 575, approximately $50, more than $60 a share. So that's another strategy you can follow. So guys, by now I've told you the strategies, and the next is the homework now.